right? So obviously today's date is January 11th. This is the second full week of the new year, all right? And I just want to encourage everybody to be very intentional, right? It's the year is still early. This is still the time to build and create those new habits. Use that newfound optimism from a new year to create the habits that you need to succeed. Right. So don't let another week go by and you still BSing around and you still making the same mistakes because before you know it, you're gonna look up, most of the year gonna be over with, and then you're gonna be upset that you didn't make the necessary changes now. So whether that's journaling, whether that's just using good risk management, whether that's just studying more, whatever you need to do, whatever you're not doing that you need to do, make sure you do it, right? And that way, you can make the most of these days and make the most of these weeks that are passing by, right? Before we dive into the charts, I do just want to leave y'all with, something real quick. I did go to church this morning. Like I said, I don't know whatever you
Go
guys'
Chaps.
spiritual denomination is, right? I'm not here to, try to force my belief on anybody. But one thing that I did hear this morning that I feel like could be very applicable, to everybody on the call that's listening is, just the renewing of your mind. All right. And specifically, the verse goes like, do not conform to the patterns of this world, but be transformed by the renewing of your mind. Then you'll be able to test and approve what God's will is, his good, pleasant, and perfect will. Now, let's bring this back to trading, all right? Do not conform to the patterns of this world, but be transformed by the renewing of your mind. This can be applicable to anything, whether it be relationships, your personal habits, whatever. But since we all traders on this call, what are the patterns of the world that'll cause you to lose in trading, right? This is greed. This is fear. This is, just a lack of faith in your setup, right? A lot of different things and not following the plan. And a lot of these things will stop you from, succeeding and seeing, what's on the other side of this discipline, seeing what's on the other side of this stress and other side of this hard work that you've been putting in on these charts, right? So I'm gonna just, urge all of you guys to not conform to the ways of the world, even in the charts because whether you watching other people, whether it's jealousy, you watching somebody else's profits versus yours, whether it's patience, indecision, fear, greed, frustration, anger, all of these patterns of the world is what stops you from creating something beautiful and creating something new. So whatever it is that's holding you back specifically, all right, do some self-evaluation, take a look in the mirror, and renew your mind, right? All these charts are heavily related to your psyche, heavily related to your mental state. And if you could do the deep work in those areas, then you can indeed, all right, succeed and get on the other side of, this long journey that we call trading, all right? I know whenever somebody makes it as a trader, I know that they've done the self work and the deep evaluation to get there. All right. So, like I said, we're not gonna be long, so let's get straight into it. Nasdaq. Nasdaq was a pain in my ass last week. I'm gonna be completely honest. First week of the year, I wasn't expecting much, honestly, in terms of fireworks and whatnot. But it was just timing was a little bit off. From my little, my 9:30 to 11:30 Eastern time window timing was a little bit off. Markets was moving a little bit after. Some days the market just moved without even, coming to my point of interest. So it was a couple things that kind of frustrated me. And, I kind of anticipated it. First week of the year, it's okay. A lot of people aren't even at their trading desk, people coming off from vacation, big players, market movers, stuff like that. So, I am expecting this week to be a lot better, all right, in terms of that. Wasn't a terrible week in terms of profitability, but just in terms of, catching my textbook setups in the time frame that I typically trade, it was a little off, right? So we started out here. I wanted the market to come down into this area of demand, which it never did. The market just kind of kept trending upward. Didn't really see much opportunity from there, unfortunately. And even here, if I'm not mistaken, what day is this? Is Tuesday. Yeah, Tuesday we started the week off on some buys. I do remember taking that. However, I did close the majority of my profit at old highs. You guys that are in Trade Genius, if you remember this trade, definitely could have kept holding because that thing took off, right? Following day, Wednesday, didn't catch any of this. Unfortunately, market kind of just kept moving. That push up we didn't catch, but we started taking some sales in here, right? Started taking some sales in here, was closing as the market started dropping. I was anticipating this move to happen from here because we came and cleared out this high. You see this slow buildup of weak highs right here. So when the market opened up and came and cleared these areas out, I was like, okay, bet market's about to drop for sure. And just didn't want to do that, right? I did close some partials, fortunately, but then the market just kept reversing. And then it gave that entry later on in the day, closer to noon, right? Where we see the big drop that we wanted to see earlier in the day during that session. So that was one of the days I missed a nice trade opportunity. Unfortunately, um, didn't hear, right? Market came and took out this low, which was expected, right? I wanted us to come clear this low, you know, try to attempt some buys down here, but just due to consolidation and the market not moving, didn't really trust that price action right there. And then obviously the market ended with this beautiful buy up. And I just chose not to trade on Friday. Dumb move on my part because this was a textbook setup sweep of the Asia session lows, and that would have been the move of the week right there. So overall, it was up and down, wishy-washy. So what is it that I see happening this week? All right. Well, this week, as we approach, the previous week's high, all right, I do anticipate the market to hopefully retrace a little bit first, because I do look at this area as a target. So until the market breaks through this level, I'm gonna continue to think bullish. All right. I'm gonna continue to think that we're in an uptrend. Now, if we can push down a little bit first, I think that'll be a good opportunity to try to catch a buy to target this high. Now, where may we retrace to? That's the interesting question. All right. We can come down to the 5 minute and we can see different potentialities. All right. Obviously, the best case scenario for this particular trade is for us to get a full, retracement down here because this would be us running into a previous strong low. All right, so if we come down into this region, you also see the sell to buy candle, right? So you see the big sell candle, really big buy candle as well. That's a beautiful area to take a trade. You want to take trades where these candles are really large like this because it's like a footprint. It's a market maker's footprint. I prefer not to take trades where the candles are small like this because that means that there's not a big player active in participating. When you see the big candles come into play, that means that somebody with the ability to move the market is trading at that time. So this is where the real moves happen, and you don't have to wait in consolidation and stuff like that. So again, above these highs, I'm anticipating there's a pocket of liquidity up here as a target. So what can happen is the market can just come right here and then just go straight to the target. That's a very valid possibility. What I would prefer to see happen is see this low, and this low get taken, right? Because you got to assume again that there's money underneath each one of these lows in the form of internal range liquidity. Okay. Now, some of you guys might ask, what is that? The thing is, when you identify your trading range, okay, this is the low of the range, this is the high of the range, right? I usually mark this with a BR, and this is a TR, right? Bottom of range, top of range. So, but just for the sake of this call, I don't want to, I'm just trying to hurry up and get through the call. So, if this is the bottom of my range, this is the top of my range, I want to clear out all of the points of liquidity that are internal of the range, meaning in between this and this. All right. So we have a set of weak lows here. We have a weak low here. We have a weak low here. All right. And we have a strong low down here. Why? Because this low pushed beneath the first low right here. Okay. And a strong low essentially is just like a W pattern where the second dip of the W is lower than the first. Okay. That's essentially all a strong low really is. So when we look at this low right here, remember when we're taking buys, we want to take buys in between where the strong low and the weak low is. Okay. So if I have a strong low right here, because we got made a low, took it, then there's a weak low right here. This is the area in which I could take a buy. Okay. And that is a pretty decent sized area. So, you know, we can come down to these lower time frames and see if we can refine it because we don't just want to mark up this whole zone. Like that's a super big zone. When we come down to like the 3 minute, you see a little nick in the market right there. Okay, cool. I could use that low as internal liquidity. So now, hold on. There we go. So now I can move my zone from here to here, right? Or maybe you come down to the 1 minute. Maybe you can refine it down a little bit more. Okay. It's not really too much more to refine here, honestly. Um, Once again, build up of liquidity right here, take it out. Then we run to the upside. There is a hezzy here. Then we cross over bullish. So we do have a strong low hezzy crossover. We also have imbalance, fair value gap. You see that big body candle? I told you that's what we like to trade within, all right? So ideally, best case scenario, even though the market is kind of far from this point, the best case scenario for a buy would be for us to come back down here. When we come back down here, I would definitely load up on some buys within this area and target these highs, all right? So that's hopefully what I want to see happen. That's like the best buy scenario I see. But you can also have the situation where we just have this very shallow retracement and the market just pushes to the upside. If you were to take this setup though, I would wait for a break of structure to the upside where you take out old highs and then you try to target this high up here. Now, the reason I wait for the break of structure is because you just want a little extra confirmation since you're taking the trade out of this demand zone right here, right? Because it is a shallow retracement. If you really think about it, again, if this is our trading range, the low of the range versus the high of the range, to take an entry right here towards the top of the range, that could be kind of risky. So that's why you want to wait for a little extra confirmation to validate that pattern, right? But if the market retraces way down here, then you could just take it simply off the fact that you're buying low and selling high, right? That's just your basic buy low, sell high principles, right? A lot of people use Fibonacci retracement tools. I don't really use them, but if we retrace 78% of the move just off of positioning alone, that's a good trade setup. Before we look at any other technicals, before we look at strong low, hezzy crossover, internal liquidity, before we look at any of that stuff, that's a good trade setup just because we retrace 78% of the range. We have to wait for more confirmation up here because if you notice, we're above 38%. Like we're way up here. So we're basically buying at a premium to buy right here. So that's not a high quality trade setup. Not saying that it can't happen, but that's just something you want to be aware of, right? So again, I'm looking for a retracement on Nas. You can take this jab if you'd like. this first one. But if this fails, just know we're probably gonna come down to this demand zone down here. All right. Let's keep it moving. So GU just kept dropping this week. I was anticipating some buys on GU and EU. Or I was actually anticipating buys on EU last week. That never came. So market is still dropping. Okay, still dropping. What's crazy about this, guys, and again, if you understand the technique, hezzy crossover, the technique is gonna work no matter what. Only time it doesn't work is if us as human beings we apply it wrong, right? But if we just look, see the strong high build up. I had this zone marked up 2, 3 weeks ago. Why? Because if we zoom out, what do we see? You see a hezzy off of demand, right? We see a hezzy, then the market crosses over. Mind you, this hezzy crossover was way back from September. So it doesn't matter when and where this stuff happens. It's just as long as you get the hezzy crossover, you can mark up this high and know that eventually the market's going to come back to this point. Whether you're on the minute chart, whether you're on the hour chart, whether you're on the day chart, it don't matter. All right. So the fact that the market came right back to that point, like that's no coincidence. All right. So you create the weak highs here. This is your future trap. Market came and ran through that trap and then just dropped. And now, since we just broke this low, truth be told, I would be interested in, seeing some form of accumulation. I'm not just going to buy right off the rip, but I do understand that, this was the low and this is the high, of the range. And since we did just push the entire distance of that range, there could be some profit taking that takes place that just pushes the market up a little bit. And market probably will keep dropping though, because this is a much higher time frame zone, right? I mean, you can mark this up on the 4 hour, even the daily, right? But the fact that you can honestly mark this up as a daily supply zone, I don't anticipate the market just reacting and going bullish or nothing like that. But again, we could see a slight retracement, okay? Slight retracement. Even on the daily, you see there's a little area of imbalance right here. So I wouldn't be surprised for us to get a slight little buy back up. Might be a little demand in this area down here that can cause the market to come up, create that left shoulder or that right shoulder, excuse me, and then continue to drop. Because right now this is a left shoulder head. We're looking for that right shoulder for the market to keep dropping. All right. Now, I don't just look for head and shoulder patterns like I look for more details than that. But just since we're on a daily chart, there ain't really that many details on the daily chart, no way. So I'm just giving you guys some basics to kind of understand the way the market moves. Yeah, I definitely pay attention to this area. It's not the nicest looking, but again, it's just a continuation. It's not a reversal. It's just a continuation. So we could just clear some highs here, clear some highs here. That might be all we really need for the market to keep dropping. If it comes to a reversal, you want to see a little better price action. That's why like we came out from that daily hezzy crossover to create the peak reversal high. But when it comes to these continuations, sometimes they're gonna happen off of ugly areas of supply, ugly areas of demand. Like it don't have to happen in the best zone ever when it comes to a continuation. All right. All right, Euro USD. Um, I was kind of fooled on this. Now, even with me being fooled, entry right here still winning a profit, right? So it's like just the way that I trade, I enter here, I'm break even by the time the market is like here. So even with the market pushing back down, this is not a loss for me, right? It's just a slight miscalculation, but it's not a loss at all. All right. Market did push lower than I expected. And like I said, first week of the year, first full week of the year, just very awkward price action, right? Like, the market just kind of been bleeding since last year. Um, this is December 24th. And once that trap played out, the market just been pushing went in one direction ever since. So now what I might see happening, okay, is we're approaching this area of demand down here. So I would definitely keep my eyes on that. This doesn't appear to be the strongest low ever, right? If I just look at it in comparison to all the lows over here, like I don't necessarily think this will cause a major reversal or nothing. But again, just like GBP USD, it could just, shift structure temporarily. Maybe it just clears out some of these highs internally before it continues back down, right? Because this is an area of supply we got to pay attention to right here. We just look at it closely. You see we created a high, we took the high, we created, fair value gap bearish, even hesitated before crossing over. So there's a lot of buyers, or not buyers, but just orders that's in this area. Okay. We got the buy to sell candle, fair value gap imbalance, as he crossover. I could see the market coming back to, this 1.72 area. 1.172, 1.172. I would be looking at that for potential continuations. So again, that's still a little ways away. If the market comes and hits the demand zone, goes way up there, we're talking about 112 pips of movement. So that's why you can still explore these buys. Make no mistake. I might be bearish on a higher time frame, but we can most definitely cook up on these buys on the lower time frame if the market permits. Okay. And that's just how multi-time frame analysis works. You don't have to marry one time frame and wait for 3 days for the market to come hit your zone. Some people do that, but at the end of the day, if I could find the risk to reward on a lower time frame, also understanding that the markets are fractal. So whatever you see on a big picture, you can also see on a smaller picture. You don't have to wait for the big picture to play out. You know what I'm saying? Look for the smaller picture to, create the pieces to the puzzle that fit the bigger picture, right? So I can know that 1.172 is my sell zone, but if I see buy patterns on the lower time frame, I'm gonna take them because the market clearly has to buy in order for me to get to 1.172 anyway. So if the market has to go up for me to get to my potential sell anyway, I might as well try to find a reason to get into the buy. You know what I mean? Even though it's temporary. Okay. So that's what I see here. 1.172 is where I'm gonna look to sell, but understanding that the market needs to go bullish temporarily in order to reach the sell, I'm going to be open to looking for sell patterns, or excuse me, buy patterns in this area. So if I see the market start ranging, you start clearing out some lows, start popping up bullish, I'm going to take that and I'm going to catch 100 pips before we get to that sell. All right. Gold. Gold took off, y'all. And if you was on a weekly, not the weekly outlook, if you was on a what call is this? I'm gonna say Wednesday, maybe Thursday. I can just flat out miss this, man. Flat out miss this. Looking for the market to come a little bit lower over here. I was looking for this here. I wanted the market to come and take this low out like that and then go. And let me just, say that to say this. It happens to the best of us, missing trade opportunities and stuff, y'all. If it come down to it, if it come down to it, don't miss an entire move over a handful of pips, right? Like if you like, it's one thing if you're trying to set a pending order because you're gonna be asleep or if you're gonna be at work or something like that. But if you are awoke, right, and if you up, like don't miss out on this whole move because you want to just like don't miss out on this because you want this, right? Like that's kind of foolish, right? I could have got in here. I wanted to get in down here, and I ended up missing the entire move. Now, don't get me wrong. This is the difference between 1 to 5 and 1 to 9, right? So don't get me wrong. This is almost double the profit, right? On the same risk. But even still, sometimes you gotta just charge it to the game and realize, all right, I'm not gonna get a 1 to 10 this time. Let me just take the trade with a slightly bigger stop loss. So that's my fault. We all should have been in that trade together. It was simple, consolidation, manipulation, continuation. That's as textbook as it get. I just wanted us to come down a little lower, and it never happened. So now that the market have moved on without me, I do believe gold will continue to go bullish. To be quite honest, um, it's a lot of stuff going on in the world politically, internationally, all types of stuff. I would consider gold something to keep, going bullish at this point. Until we get some stability across other countries and stuff, just keep buying gold. Gold is gonna keep flying, y'all. This will probably be the year it go to 7, $8,000 an ounce. Like I don't see it slowing down, um, because the entire monetary system is changing, and that's not something that happens overnight. Okay, so continue. This bull run is gonna continue. This large sell-off right here is just temporary to knock out late buyers. Now that that crazy ass sale happened, probably scared a lot of people. We right back to original programming. We right back on our buy wave. And if you could find entries on a lower time frame, by all means, execute them and take them. All right. Um, gold has been paying out crazy. Gold and silver has been giving out returns that no other asset class has been given, not even crypto. So these are the hottest markets out right now. Metals are the hottest markets out. So definitely, you know, take advantage of that. All right. Bitcoin, we still waiting for a real move. Right. We've been in this little consolidation now for almost 2 months. Okay. Almost 2 months. It's been a painful ride, I'll be honest. There's one point in time I was losing four figures a day. Like every day I checked, we was losing. So it has stabilized over the past month or so. But overall we still waiting for, that push back up. All right, we're still waiting on that push back up. Hopefully it happens sometime this year. Obviously, crypto is long term, guys. So, I don't trade crypto the way I trade currencies. I take it and I just I'll come and check it in a few months or something like that. So if you got the capital to do that, then I'd definitely be buying some crypto. All right. I'd definitely be buying some crypto. XRP had a nice pump a little over a week ago. Now it's starting to retrace a little bit. I do believe XRP will continue looking for a higher load of form in this area here, and then for us to keep popping up. All right. But overall, when it comes to these cryptos, man, it's really just about buying and holding, having steel hands and just hold and hold, don't fold, right? But overall, another quick recap, y'all, just before we wrap it up. Like I said, this call is gonna be a lot quicker because I got some family stuff to attend later. So I do appreciate y'all for adjusting to the new time today. Next week it'll be just original time. 6 Eastern, give you a little more time to hop on. So I do appreciate y'all for adjusting quickly. But again, just to do a quick recap, Nas 100, it's a possibility that we react from here and just go clear these highs. Best case scenarios, we come down here and then react and go bullish. So far as gold is concerned, I would buy gold wherever you can on the lower time frame. I do believe gold is going to continue to push. Obviously, the immediate target is these highs right here. So if you can find your lower time frame setups, all right, let's go ahead and target these highs. Be aware of this slow build right here, this slow burn to the upside. Could be liquidity forming right here. So keep your eyes open for something like that. I am open to that. I do see the potential for this to be somewhat of like a hezzy, right? Because I'm looking, I see strong low, another strong low right here. I see strong low. The market hesitates, creates equal lows right here. All right, then it crosses over bullish, all right, and gives a weak high. Okay, so what we have here is strong low, hezzy, crossover, and the highs are weak. You also got a weak build up right here. Okay. So if the market does drop, that's where we should be able to take some buys. All right. Keep your eyes on that when it comes to gold. I like that a lot. If that happens, I will most definitely take that trade. All right. Euro USD. Another again, quick recap. Be on the lookout for buys. All right. Be on the lookout for buys. 1.172 will be in the market for some sales up here. Notice the fair value gap. Notice the imbalance. Notice the strong highs. Okay. Strong push up, strong push down. These are the areas you want to take a trade. I call them footprints, right? It's like Bigfoot leaving his footprint in the snow. You know that ain't human, right? You know that ain't human. These small candles, that's humans, right? That's, retail traders. When you see the big candles like this, that's institutional, all right? That's not retail, that's institutional. And we want to trade with the institutions. So whenever you see that big push up and big push down that's leaving imbalances and fair value gaps and stuff like that, that's where you want to take trades. So 1.172 would be a great area to sell from. That's still 100 pips away on the buys. So you can take some temporary buys for about 100 pips in order to find those sales, all right? And the same thing with GU, right? EU is probably looking a little cleaner, but the same principle applies to GU. I'm looking for short-term buys, all right, in order to get into some long-term sales, all right? So with that being said, guys, I know this was a quick call. Usually I do take my time on the weekly outlooks, but got some stuff I gotta do today. So I do appreciate y'all for tuning in. Much love and appreciation as always. If y'all got any comments, questions, or concerns, feel free to reach out. I'd love to be able to help you guys. And I'm super excited for us to have a great, great year. And it all starts with how we prepare, right? So all you guys that's on the call today, you taking that first step to make sure you're ready for the week. You stay ready, you ain't got to get ready. Ain't going to be no surprises because we already mapped it all out. All right. So with that being said, feel free again to reach out if you got comments, questions, or concerns. This is my Instagram here. Be aware of fake pages. Okay. Be aware of fake pages. I will be uploading this to my YouTube page as well. So when that's ready, I'll go ahead and let you guys know. All right. Appreciate y'all, man. Any comments, questions, or concerns before we hop off? All right. All right. Perfect. Perfect. Appreciate y'all as always, man. I'll see y'all on the next call. Trade Genius. I'll see y'all this week in the chats. All right. Peace.